me was Apple. Apple was neutral on all that news, and then Apple was lit on fire this morning. So it's like the money came out of those others and went into Apple, and I hadn't figured that one out. But Apple's obviously trading near its highs. It surged to a high today. Apple did of 280.38. And I want to remind people I have a trade with the Russell I'm going to do during my live trading 1:30 to 3 today. So just be ready. I got a good one, I think, lined up for us, and we'll do that. The market itself, I think the XBI we tried to buy yesterday is still a buy. I'm going to probably adjust that also at 1:30. I want to give the market a little time with this kind of air pockets in it. The risk is hard to control with volume. Okay, and I think when volume in the market is a little lighter, you see it really move. I mean, move really, really fast. So we'll be very patient on the trading side. But one trade that did work out was our new anchor trade. Who made that anchor trade and got out this morning on the anchor trade? Who made the anchor trade and got out this morning at a nice profit? Just type in there if you made the trade. David made it. Bill made it. John made it. Ooh, yeah, a lot of green going this anchor trade. I love this anchor trade. I was talking to a customer yesterday, and I told him I was going to do 50 of these suckers, and I wish I'd done 100. I mean, this is really a good trade, okay? Really a good strategy. We'll cover a little bit of that today, give people a chance to join us. It's really a diversified way to play the market, and it's pretty good. So, yeah, dollars. So it's right there. All right, risk involved in trading, though. Every trade's got that risk, and we're always concerned about that. In my opinion, Chuck, I'd like to go to a live market, and let's just talk from the live market before we come back to the slides. In fact, I like to do that, Chuck, when I get started. And the reason I like that is because I can look at things. So let's just look at right now. You can see Google's about to hit the target on that sell-off. What do you got green there, Chuck, on the left-hand dashboard? What do you got? Let's look at the greens. What do you got?
Let's see. Do you want to put them in order or just read them off? We got the Dow, right? Let's
look at it on a chart, the Dow, see what it's telling us.
All right. Hang on a second. Let's see, clicking in the wrong place. There we go.
All right, now if you look at the Dow, and the Dow, if you look at the current price compared to the penetration bar, does everybody know what the penetration bar is? Say yes if you know what the penetration bar is. That's a very important concept here at DTI. Okay, you can see it's slightly higher than that, and the low of that penetration bar is what, Chuck? Can you tell us what the low of it is down there?
Low of the penetration bar is going to be 46,692.
All right, yeah, that's where you got to stop and say to yourself, maybe I shouldn't be long anymore. All right, what else you got? Google, you already covered. What do you got else?
Amazon, I know you're a big fan of that.
Yeah, Amazon, I pointed out, I was talking to a client this morning, and I said, Amazon looks like it's about to be a play. And sure enough, it's up $1.50 from when I was talking to him. It's at 28.31. I haven't got in it yet because I've been doing other things, but Amazon, keep your eye on Amazon as a hot property. All right, what else you got?
You mentioned Apple. They have already gone up to the target on the reference bars. So
yeah, what was the high there, Chuck?
Let's see that high point, 280.33.
All right, I would say if Apple goes to 280.55, it's ready for round two. Write that number down, 280.55 on Apple. Write that number down if it happens. All right, what else you got?
Let's see. J&J joining the crowd. Johnson & Johnson.
Yeah, that was one of my Magic 5. I think was it Monday or Friday? I said let's look at the healthcare, Again, you got a real far penetration, and so you got to watch it when it goes that far. Usually about over 40% into the zone, you ought to stay off of it. 40% is probably a point it gets really sticky.
Yeah, not only
40%
set up
of
the
that
trade.
zone, like you look at it right now, it's about 50%. You need to wait, let a little time go by. It's still in play. You just got to wait for a little time, let it consolidate.
Something to
Okay.
pay attention to for Genesis.
We got that coming up, right? Yeah.
Yeah, and let's
Sounds
go
like
over
a
to
good idea. But anyway, that's the current.
IWM.
I'm sorry, what did you say, Chuck?
I was going to say, let's go ahead and look at IWM.
Yeah, IWM. This is a market. You want to throw it in there for us?
It's in there.
All right, look at IWM. Almost a perfect buy there. Everybody see what I'm talking about? What's the high of the confirmation bar? The bar after the penetration, right there. What's that high?
242.82. So basically running into 243 resistance. That's where we're trading right now.
Yeah, it's IWM. IWM is dancing on a needle right now. Looks good. I'll be doing a trade that this afternoon. I've got a couple trades I'll do. I'll do XBI. I'll do Amazon this afternoon, and we'll see if and not Amazon. I'll say I'll consider Amazon this afternoon. But XBI and IWM, I'm doing a trade I've been waiting on to set up. I'm going to get in it this afternoon, about 132 to reference bar 4. So that's pretty slick what we just looked at, I'd like to say. So let's go to our slides. Why don't we go to our slides? Any questions about the current state of affairs?
I guess everybody's up to date, Tom. We got no questions coming in. How to determine the option when a trigger is hit?
Robin, I've only given that lesson about 100 times. All you got to do is go to YouTube and search it. You'll find it. I mean, I spent a lot of time showing people different ways to do it. Go to YouTube. There's a lot of useful information in YouTube for you. That's my opinion.
Apparently, we're getting a bunch of share requests. Let me see if I can set this up. Hang on one second. All right, let's use a different link here. There we go. All right, so remind everybody, T-Buzz weekly trade letter, of course, going out. I think it's out now. Released Monday after the close. Broad market update, cut through all the noise. Key news for the week. I think, Google was one of the big highlights this week. Tom has been hitting that all week long. Key earnings to watch. I'll give you that list of earnings. Weekly Magic 5 stocks. Each week we handpick 5 stocks that could have strong setups, and you've seen the way those play through just looking at those charts earlier. And of course, special opportunities. And what's more special than Google this week and that disruption within the AI chip maker market? I think that is probably the headline story this week, Tom.
I was thinking about you could look through 8,000 stocks. You wouldn't have had a better one than the weekly newsletter gave you this week because it was right on target.
Yeah, and if you want to access that $9.99 yearly access, sign up at dtitrader.com/weekly. And now let's get into trade and trade.
All right. T-Buzz talking trade. Again, we mentioned it yesterday, spent a little time on it, but I think that people don't understand just how powerful it is. And I don't know how to make it understand when you buy stock I guess, how many people see me say, get along Google at 3:07 and don't do it because you don't have enough money? How many people do that in talk and trade? I'm just curious. How many people do that? You can buy 5 shares or 10 shares of Google. In that case I just gave you, if you'd have bought 10 shares, it'd cost you about $1,500 on margin to do it, right? And $1,500 on margin would have paid you on that run, 7 to 34 would have paid you $27. That's $270. That's your monthly subscription. So you do have enough money. You just, maybe it's $1. If you bought 1 share, okay. So I'm giving advice that's worth a lot more than what I'm charging for this thing, and that's just an example, And I got some people that use it and buy the shares, but I'm just telling you, it's just something that it kills me when I see people not taking advantage of it. Because we do a lot of work finding that stuff for you, and it ought to be paying you. It pays me. That's my playlist for each day. All right, I want to talk about long, short, or out today. Now, every market's broken down in a 3-bar pattern. The first bar is the establishment bar or reference where we have been. The second bar is the indication where we're going. And the third bar is the confirmation. Are you sure it's going in that direction? Okay. Now, that's what it looks like. If you see a long market, that's what a long market looks like. You go find a lot of markets out there that have whatever time frame you're on, it works. And so that pattern is what you're looking for. If you're going down, that's the way it looks. If you should stay out, it's trading, I call it swap and spit type market where you chew yourself up. But that's how you can learn to take advantage of it. Okay? That's the terminology you got to know. The penetration bar on a compass chart, this is the bar that initially enters the buy or sell zone. You ought to write that down and memorize it. It's going to make you money if you know that. I've had people been with me 10, 15 years, they don't get it. If you like to make money, learn the concept of the penetration bar. And then if you get a confirmation bar, that breaks the penetrate zone with follow through. Now, the buy signal, if it fails, you got to know how to recognize that with the buy failure. The sell signal, straightforward. You got to recognize when that fails, but they tell you so much if you do get a failure. Sometimes the failure is a better trade than the buy signal. Now there it goes. Chuck, I want you to explain to everybody what that says and what it means.
Sure,
and then
Tom.
I'm going to follow up by saying, let's say it this way, okay?
Yeah, sure, Tom. So the buy signal on the compass chart is when you have the penetration bar go into the buy zone. So it's the first bar after a reference bar, or even the reference bar itself, that enters into the buy zone. And when you're looking at a compass chart, you have a buy zone above the market, a sell zone below the market. So on the buy signal, you penetrate into the buy zone. Then you wait for the next half-hour bar, and you look to see if it's going to confirm the indication. Now, it doesn't always have to be directly after. Sometimes it could be an hour later, sometime before the next reference bar, preferably. But what you're looking for is break the high of the penetration bar. You're looking for the higher high. If you get that, that's your confirmation. At that point, you're looking for the market to extend towards the target. Now, in this example, which is from the E-mini S&P a few years back, you can see the prices. You can see how much the S&P has grown over the past few years. But you're looking for the market to head up towards that target, in this case 31.21, made up to 31.1750 on that chart. But the idea is you're moving in that direction. And notice that you start to get a point where you're following those lows and you have that trend keep going. And just let me go back in these charts a little bit. This is what a long move looks like. That's what a short move looks like. And when we look at that buy signal, you can see those bars giving you those higher highs, higher lows throughout the move. So that's how the penetration bar shows you we're in the area that it matters. The confirmation bar shows you, yes, this is what we're doing. And then you get the follow through on the additional bars that you're seeing on that chart. So is that clear? Where the target is on the chart? Right. So on the compass panel, you'll see buy zone, target, sell zone, target. Those are standing out in colorful colors. We're focused on the buy zone and the target. Those are the green numbers. So you can read them on the chart. Now this is, a historical record here. When we look at the live market, you'll see the current numbers that are involved. But the information is all there in that compass panel, what Tom likes to refer to as the metric. Well, it is on the side, but it's also on the chart itself. You see buy zone, target. Now, if you're trying to figure out price, it's close to it. It's going to give you a price scale over here, but to get the exact number, you read it off of the metric panel. It's a good question, Robin. All right. So next up, we're going to look at the buy failure. This is what happens when it goes in the other direction. And you see the reference bar here. We aren't paying attention to the back of the chart. It's from the reference bar. We have a penetration. We do not get confirmation. And notice what happens here is we break the low of the penetrating bar and you get a big down move. So this is what we call a failure. Now, this failure also happens to be a penetration bar on the sell side, but what matters is breaking the low of that bar there. So you see the reference bar, and then you see the follow-on bar, right? So I'm less interested in the metric at this point because we've thrown the metric out, the penetration occurred, and then no confirmation on the top side, break the back end of the move, if you will, because it never got confirmed. So you break the trend, and that's what you're trading there is that break and run. So I don't have to wait for the move down. This is not a sell signal that you're trading here. This is a buy failure that you're trading. All right. So
I don't
next
want
up,
him to go. Let me just interrupt, Chuck. I don't want anybody to go further unless you have all your questions answered. Because if you know these four patterns, how many people would like to have about a 30 or 40% return over the next year? If you learn these four patterns using the roadmap software, you will know where to enter, you'll know where you're wrong. Two big problems most people have. This is what you've got to learn. Four patterns: penetration, confirmation, and then you got to know what it means when an event occurs. A buy signal goes to the target. A sell signal goes to the target. A buy failure goes to the opposite target. A sell failure goes to the opposite target. So what we've done with these four patterns is solved a big issue for most people that try to trade. So learn these four patterns. You bought the roadmap. There's a module you can go watch. It's more detailed, but I wanted to cover it today because I think people are starting to wake up to the fact without the roadmap software, you're not going to do well in the market. I just promise you won't, because you know why? Your emotions get in the way. With the roadmap, it forces you to do the right thing, which makes you disciplined. Take it away, Chuck.
all right. So that's the buy signal, the buy failure. Now the sell signal and sell failure are going to work the exact way, just moving in the other direction. So here we have the first bar that moves into the sell zone is the sell penetration bar. And you can see that right here, sell penetration, market comes down. Then we look for the confirmation which we get on the next bar over, and that goes to the target. So if subsequent bar moves further into the sell zone, it is called a confirmation. Sell signal occurs once the sell penetration bar is followed by the sell confirmation bar. And you can see the market did move down and even extended on the next bar. Came in late. Will the class be sent? We are recording as usual, and I'll get that link for the slides to you. In fact, hang on just a second. Let me see if I can get that slide link for those that came in late. Okay. Sell failure. The sell signal is a failure if the subsequent price action breaks the high of the penetration bar. Sell failure bar breaks the high established by the sell penetration bar.
We had that today on the mini S&P. We had a sell failure once it got higher than RB3. When it went down to 66.75, now it's trading higher. It's trying to go higher. Go look at the market. Not surprised it's trying to go higher. You can use this for stocks or anything else you want to use it for. Okay.
Right. And you'll notice this in this example, that penetration bar, and instead of getting the confirmation, we broke the back side of the bar, which in this case was the high. And once that market breaks the high, you're expecting it to run into the buy zone and up through the target. Yeah, lots of sell failures this morning. Very active morning in the market. Now looking at the dashboard, going through, and this is dashboard creates a clickable library of compass charts with the dashboard in Roadmap software. So you can see Google lined up here. You can see how active that was this morning. This is prior to RB3. The time on that was around the time of the PPI release this morning. You can see how mixed up the markets were, and we'll see if they continued in that direction. Tom, did you have anything else you wanted to add on the dashboard?
Yeah, I want to answer Dave's question. Dave says, do I consider the WIX? Dave, you've been listening to me the greater part of 7 years. Have you ever heard the word WIX come out of my mouth? So I don't think I consider him. What do you think, Dave? Multiple choice. No, I could care less. I'm looking at these 4 patterns, nothing more complicated than the 4 patterns. And if you got, honestly, with the dashboard, it tells you where to look. If you go to the dashboard, it tells you which ones have made a sell signal and which ones have not. Then you got to go look at the compass and see where they are on the actual signal itself. But I find it very good when you can see exactly. Okay. You had to watch the tape, Doc. Go watch the video. We got it on video how to set it up. It's easy to set up. We went through it over 2 days. Any of the last 2 days should tell you about the dashboard. Okay, so this is what we're looking at, right? Okay. I'll take it over for here because I got another thing I'm going to talk about. The Mag 7 this week. Google's getting into AI. NVIDIA and AMD are pulling back. Google's up over 6% in overnight trading. I called it out last night in my TNT room. I told you I was buying it at 27. It went to 34. You can't ask for more than that. Meta's responded favorably, and Apple this morning was slightly lower and surged at the cash open. Google is drastically impacting the rest of the Mag 7 as they get into, as Chuck said, as they start getting into NVIDIA's pocket and other pockets like AMD. I think everything is, I don't look for NVIDIA to go away because Google's in the business. They're just going to have a little bit more competition, okay? Now, the anchor trade. You've heard me talk about the anchor trade, and I'm even more convinced everybody here ought to be part of it after what I saw on this last one. And you saw a bunch of newbies making money, and I guarantee you they loved anchor trade. But my theory is buy it wholesale and sell it retail. But what does that mean? buy at wholesale. Before we go to the next slide, let's ask that question. If somebody says you can buy something at wholesale, what does it mean? At a discount to what it's really worth, right? And then if you can sell it, now you're in the business of money. If you sell it at retail, right? Buy it at wholesale and sell it at retail. Okay, that's the concept. Okay, next slide. I'm looking for positions that are already in the money. The option spreads we're looking for are $1 wide. So when they fully mature, the maximum it'll go is $1. Everybody tell me you understand that. Okay. Everybody understands it, right? If it goes $1 wide, right, the most you can make is $1. Everybody get it. When you look at it, if it's less than where it is in the money, you say to yourself, what if it expired the next 5 minutes? It will tell you the retail price. So if it's 80 cents in the money and it's at 80 cents, that's not at wholesale, that's the retail price at 80 cents, right? Because it's 80 cents in the money. Now, if you can buy in this example less than 80 cents, you gain an advantage. Everybody agree getting in at wholesale is an advantage? Well, that's what we're doing here. We're looking for positions that are in the money to start with. And the one we just did, I think we did an 89.90, okay? And so we bought the 89 and the 90, and somebody type in where TLT is right now.
We got TLT at 90.50 right now.
Okay, so TLT is worth $1. Everybody get that? And what we told people, take profit at 97 cents. Go on and get out and get ready for another one. That's the reason you're taking it at 97. It's really worth $1 if you want to wait to expiration. Does everybody have a better understanding why this is so valuable, what we're doing? The odds are so much in your favor with this particular ticker, you got a way to pick up some real money here, okay? And that's exactly what I wanted to cover today. Now, well, if you buy it, you got to sell it, right? That's how you get out. If you pay 80 cents for it and sell it for 95, did you make any money? You tell me, Bill. Or Tim, tell me. If I pay 80 cents for something and sell it for 95, did I make any money? No, you got in as a spread, selling as a spread. Why would you want to complicate it? Folks, I got to tell you, if you're not part of this, you don't want to make money. This is one of the, I've been doing this for a long time. And this is one of the best ways, everybody out there, whether you're a beginning trader or an advanced trader, you do it. Don't worry about it, Tim. I will teach you next week after we get back from Thanksgiving break. I'm going to have a master class. But there's a video you can go watch right now. Don't take the attitude, I don't know how to do it. I didn't know how to spell the word stocks when I got involved. They're inside, Rob, they're inside the Telegram channel. They're inside the Telegram channel. Now, we're going to play a video. It's a little longer than I'd like, but it's so good, I don't want to cut any of it. So let's play the video. I'll see everybody for live trading today at 1:30. If you want to avoid the video and just join, click that link right up at the top, dtitrader.com/anchor, get on board, because a trade will come out. Get into the Telegram channel, okay? Get into the Telegram channel because the trade comes out in 35 minutes, a new one. And I'd like love letters for anybody that made this. Send it to T-Buzz or send it to, what is it? Where do I want those love letters to go? I think it's tbuzztt at gmail. tbuzztt at gmail. Got to send me a love letter if I put that much money in your pocket like I did. The entry price can be adjusted. It's got a little room there. Maybe you pay 1 or 2 cents more, depending on if you got time to watch it or not. I mean, 79 cents to $1 still pays you. Oh, don't be lazy, Philip. Write those words out. Tom, I've been trading X number of years. Here's how you do it. I've been trading X number of years. What I saw in the anchor trade, never seen before. And it's automatic. That's what I love about it. Jonathan's on vacation. I'm doing trades in that sucker. I love it. Anyway.
Just let me know when you're ready for me to start the replay.
Well, Adam, if you got anybody left that's not part of Anchor, maybe we ought to take their visitation pass away, because if they're here to make money, this is the way they can do it with low risk, diversify what they're doing, be consistent, and really learn about making money. I'm pretty high on this, by the way, okay? So send it out, let it happen.
Right now, thanks again, everyone, for being here. And today, just as the slide says, we're going to look at a new trade discovery by the DTI team. And what we're going to look at is how one of the most stable assets, a massive asset, gives us this special income opportunity that really is quite unique. Now, a lot of times you'll hear, hey, this is unique. And what they mean is, they use an 8 moving average instead of a 9 moving average. Oh, look how unique it is. No, this is actually really unique. The way that it functions, how the asset works, and then the data behind it, I think, is really powerful. So I'm excited about this. You guys know me. I'm a math nerd. I'm a data nerd. So as soon as Jonathan and the DTI team showed me the stats, I was pretty excited about it. And then as Tom and I have talked about it, I've gotten more excited about it. And we're going to dive in. Now, before we dive in, you guys know the drill. Profits, performance, not typical. Obviously, no one in here is making guarantees or going to say we can see the future. In fact, this is really the opposite of that. We're not trying to predict anything. We're just trusting the data and the edge that we think we found here with the research, which shows about a 79.4% win rate. It's a little bit higher now because we got a winner on Friday, but a little bit higher than that. And then average winner a little over 18%. So that's kind of in that juicy income. We're not going for 100%, but we're not going for 5%. We're in that juicy income range. Average winner is about $458 on a $2,500 stake. And one of the nice things about this trade, which again we'll talk about later, it actually has a lot to do with why the trade works, is how cheap it is. About $80 a contract for the average trade to get in. So if you guys are not familiar with trading risk and all that, you can go to the DTI homepage, but I'm sure most of us in here are adults and we kind of know the drill when it comes to that. By the way, if you guys are here and you don't know me, thanks for being here. I'm Nate Tucci. Tom and I have worked together now for about 5 years, I guess, 6 years. So it's always fun to work with the legend and get to talk about trading ideas. And so a few months ago, I got an urgent report from him and the team claiming they had a new way to find income in the stock market, one that works completely differently than what everyone else is doing. It's not a matter of predicting some AI acquisition or penny stock. It's not trying to figure out whether gold or Bitcoin is the real true store value over the next decade. It doesn't even depend on getting a single thing right about any regular stock. And I mean that sincerely. It doesn't matter about a single stock and what your prediction is. Tom claimed that as long as a $58.2 trillion market doesn't go off the rails, his special trade has the power to pay out about $458 in under 48 hours, almost like clockwork. And that's based on just a small $2,500 stake. If you did a 10K stake, you'd be at about $1,832 on average in 48 hours. But really, that's not the best part. Unlike most methods, it literally doesn't matter what regular stocks are doing for this particular trade to work out. So if you go back to August 2024, it's a perfect example of this because you guys probably remember it was kind of similar to last week. We had the S&P get crushed, tore down about 8% in 9 days. And the headlines were brutal. Stocks tumble, jobs report, tech rout continues, Dow closes down 600 points, NASDAQ enters correction, weak jobs, stock market coming near crash range, NASDAQ confirms correction as recession fears mounts, and then fear, just like I said recently, was on the rise as well. Yet, during that turmoil, which you guys remember, that crazy flush, we got a quote-unquote stable trade. That's what this looks for, stable trade. So you can notice on August 4th, when all that craziness was happening, we had a bullish stability play with a 12.3% income opportunity. And as you can see, that green profit zone is where you make money. It was landed comfortably in there for a stress-free trade. Now, after reviewing the data and placing a few of these trades for myself, I told Tom we need to go live ASAP and show people this breakdown. Those are just my last couple of trades, just a couple contracts there, made a couple $100 for me. But before we go too long, let me be very clear here. What Tom showed is amazing. And I've never seen anything that works quite like it. And frankly, I wish I thought of it myself. But just to be clear, there's no guaranteed hacks in the market. Like any strategy, there's bound to be winners and losers along the way. So as I always tell you, don't come into this expecting to hit it big with the next trade. That's not what today is about. Actually, quite the opposite. This research is designed to uncover significant edge that if it performs like we expect, we can generate a really nice stream of income over time. So we're not trying to go for a millionaire trade Monday or Wednesday or any particular day. It's about how much can we compound a winning edge through good markets, bad markets, and everything in between. And this strategy in particular doesn't care if the environment is bearish or bullish, which means the income we generate on this trade could be a little less white knuckle and a little more coffee on the front porch swing, if you know what I mean. A little more, hey, things look pretty good, a little relaxing versus let me stare down that 1 minute candle and hope it doesn't make or break me. So if carving out a stress-free piece of that $58 trillion market sounds even a little bit interesting to you, well, congratulations, you're in the right place tonight. Because the man behind this discovery is going to walk you through exactly how it all works in just a minute and invite you into the private Telegram where these anchor trades are generated automatically, giving anyone following along the chance to target $458 or more as early as, I should say Monday, as early as the next trading day. So welcome to the Anchor Trades briefing. Like I mentioned, my name's Nate Tucci. Most folks know me from opening playbook or closing playbook, where I'm live nearly 2 hours a day teaching traders. But my students usually know me for my obsession with unique income strategies. That's really what I kind of obsess over, racking up over 230 wins so far this year with close to 80% accuracy across all my different income techniques. And that's why I was so excited when Tom showed me an income concept that I'd never even considered before. It's essentially a way to hijack a certain asset and it flips traditional income on its head. So the man behind this discovery, as you probably know by now, is the legend Tom Busby. Tom got started way back in the 1970s. I shouldn't say way back, Tom. That makes you look old. I should say he's a veteran from the 70s. And since then, he's been featured all over the place, Bloomberg, CNBC, CNN, all the places you would expect. And his books are still one of the most valuable resources that are out there for traders of all levels, whether you're just getting started or you have been in the markets for decades. And much of Tom's success dates all the way back to when he got handpicked to get the Globex terminal, and he was one of only 50 in the world to get his hands on that, which really opened him up to the 24-hour market. Now, that gave him insights to the market that really almost no one else had in the time, and it even helped him manage a firm so successfully that it eventually got bought out for $1.3 trillion by Morgan Stanley. And as you'll discover today, the key numbers that Tom invented all the way back then actually still play a vital role in that new discovery that we're talking about today. Now, Tom is no stranger to helping his students pull cash from the market. We get stories from, his top students across his services nonstop. Like Bruce has said, when I follow, I make money. Tom is committed to helping you. Bob said $2,000 today. Emmanuel said $2,200 on one trade. Keep up the good work. I just pulled a couple random ones out of there because we get a nonstop flood of feedback and testimonials from Tom. But today, Tom promised to show what he thinks could be the most consistent cash flow opportunity that he's uncovered in over 40 years. So Tom, first off, thanks for doing this on short notice and making your schedule. And second, why don't you jump in here and tell everyone what this is all about?
Absolutely. And one key word in that previous slide was consistency. This is a consistent approach. And Nate, I'm thrilled to be here today and to give everyone a shot at some extra income with this brand new, very unique trade. Our back testing shows this anchor trade would have paid an average of about $458 in extra income on the winning positions. Now, our data shows a winning outcome around 80% of the time. And Nate, $450 using a small $2,500 stake to do the trade. If you put $10,000 in this, you can take it up a level, knowing the historic win rate and controlled risk. The average win would jump to $1,832.
Yeah, and I don't want to cut you off right as you get going here, but you did mention risk, which I think people are going to realize is a huge part of anchor trades. And it's actually, it's funny, you don't usually say this on a webinar, but I think the risk part is the part I'm most excited to show people because of how it works differently in this trade. So I'm not going to spoil it right now, but I will tell you, when we say $2,500, we actually don't mean that you lose the whole $2,500 when you're wrong, like most income methods. You know, most income methods, you throw $2,500 out there, and if you're wrong, your $2,500 is gone. This trade works a little bit differently. So thanks to a special function built into this $58 trillion asset, our risk tends to be dramatically mitigated, which limits the losses, which makes that 79.7% win rate actually a lot more impressive and ultimately creates a much bigger positive expectancy.
That's right, Nate, which is, been doing this 40 years plus in the market, so I can tell you how critical that element will be for folks going forward with this strategy. And I don't think timing for this briefing could be any better after what we saw. You've seen in the headlines, inflation hits 3%. This is interesting how this news flows. Inflation climbs its highest levels since January. Beef prices soar. Inflation continues to linger at your grocery store. All the negatives that come out. Grocery prices have jumped. Americans are struggling. Prices have been sticky high since late 2021. And here's the truth. They're probably never coming back. With inflation grips a country for years and prices go up, they don't just come back down when inflation slows. Because it's slowing. They might dip back a hair, but prices settle near the new levels, even when inflation backs off completely. Hey, like the Big Mac, never came back to 65 cents after it tripled in the 80s.
Right, so 80s was high inflation, it went up, but it didn't come back down.
No, it didn't. Instead, it settled around $1.60 after inflation cooled, and then it continued rising through the 90s. This is a great example. I had one of these the other night. I was in shock. Unfortunately, that's just how inflation works in the real world. Even when we get past it, prices stay at the new normal, which means Americans still need more cash flow to cover the higher cost of living, even under the best of circumstances. But here's the thing. Most income methods are still dependent on the overall stock market. When the S&P is grinding higher, they perform well. When it's shakier in a bear market, that income dries up. And what good is extra income for tough times when it doesn't actually work in tough times? But this new method doesn't rely on the S&P or the overall stock market. It actually is much bigger than that. Take 2022, for example. Y'all remember that. I was short. Even in the midst of a total meltdown in the broad market from March through June, like on February 24th, our data shows the stability trigger would have fired with a 23.46% accuracy. Look at it, $587 in that kind of market. That's beautiful. And in April, as the slide continued, the study shows another opportunity would have triggered ignoring the chaos in the broad market and pushed us toward a more stable opportunity. Look at that one, 549, 21.95%. If you're not getting excited yet, you're not listening. That was when everybody else was losing their IRAs and their accounts to the tune of about 20%. So while most income methods hit a brick wall and coughed up years of gains during the brutal bear market, anchor trades would have continued plug along with a 76% win rate and a positive expectancy throughout the year. That's why I'm so confident what I'm about to show you could give anyone here that wants to take a real shot at extra income through any type of market, no matter what we face in the coming months and years. Because anyone can activate this trade from any brokerage with a matter of a few clicks as soon as our automated system fires off the opportunity. Now, it doesn't matter if you have a large account targeting $10,000 in extra income per trade, or if you started with $500 and looking to skim $100 at a time from this $58 trillion asset. All you need is a brokerage account. You got to have a brokerage account. Can't do this in the dream world. And access the private Anchor Trades Telegram channel. Like in March and April of this year, you could have tried to track all the recession predictions and pulled your money out of the market, risk of global economic recession. Y'all remember this. Reuters poll, economists said trade war makes U.S. recession almost a coin flip. IMF raises U.S. recession risks as tariffs. All that stuff was designed to get you to sell your stocks. Or it could have, you could have ignored all that because while the stock market was anything but stable, there were other opportunities for those that knew where to look. And that's the key, the strategy. Remember, it does not matter if the broad market is stable or not. Anchor trades only fire if our stability metrics are confirmed in an entirely different market. Would have triggered 10 times between March 1st and April 30th, a 21% opportunity on March 5th, a 20% opportunity on March the 7th, a 17% opportunity on March the 14th. A little trend building here, isn't it? Win, win, win. A 17.65% opportunity on March 21st, 22% on March 31st, 23 on April 2nd. Are you getting the drift of this? 20% opportunity on April 7th. I love that 25% one.
Yeah, those are the nice ones.
Yeah, that's a real nice one, okay? A 14.94% opportunity on April 17th, a 14.9% opportunity on April 21st. All in all, the study shows we would have gone 8 for 10 in March and April, the same 80% hit rate we expect based on our research in the current market. And even more impressively, while the broad market was down 6% in that span, Anchor Trades would have shown a net return on risk of 82% during those same 8 weeks. Wow.
Yeah, that's pretty crazy. So you just mentioned how tough expenses have been for the average American, 5 years now. We've been saying this since 2021 now, the inflation, the expense. But in the heart of the bear market correction, we're talking March and April, the ugliest months we've seen since, the COVID collapse. Anchor Trades still would have produced an 80% win rate and an 82% net ROI, which means $10,000 in the SPY, you're down $690, right? You're down 6.9%. But in Anchor, on the Anchor Trades, you're up $8,200. That's a pretty big difference. $8,200 or down $690. So massive difference over the exact same time frame. So Tom, can we just kind of slow down and explain, okay, what is actually going on to hand us opportunities that are so different even when that's going on in March and April?
Absolutely. First, let me just say this one more time. This is a brand new way to target income, and I expect it to be the most consistent cash flow strategy we've ever uncovered. I'm not telling you to quit your job or go all in on the next opportunity. What I'm showing you is meant to be a simple way to diversify, to target extra income when the opportunity triggers. In other words, unless you've got a 7-figure account, this isn't meant to replace your income overnight. It's meant to help you target $458, $1374, or $2748 from any regular brokerage account, knowing there's bound to be winners and losers along the way. And while I'll never promise any future results, I can tell you we worked incredibly hard to maximize our wins and limit the losses. Let me give you an example. Last December, the Anchor Trades were on a hot streak according to the data, a 20% win in December the 4th, a 16% win on December the 5th, a 16% win on December the 11th, a 9.89% win on December the 12th, a 23% win on December the 13th. It was looking like the Anchor Trades could lose. But on December 19th, on a perfect setup, the safety net was breached and the trade turned into a loser. But the beauty of this trade is that we didn't cough up all our gains on previous trades on that one. We lost 16% on that one. Now that ought to give you a little comfort when you're thinking about using this approach. Which means when we add up the 6 December signals from our back test, even include the loss, it still gave us a net gain of $1,406 on a level 2,500 cent stake.
Yeah. So, I love that example because it shows, kind of like we hinted at earlier, even when things don't go your way, the strategy still has the ability to work. It doesn't blow it up on one. So So that's 70% ROI you just said on those numbers over those 6 trades on the risk in 1 month, and that's including the losers. So that's not saying, oh, here's a cherry-picked month where we didn't take any losers. It's saying here's a month where we won 5, lost 1, and we still netted out 70% ROI. And as you hinted, there's a very special reason the risk tends to be far more mitigated than most income strategies, we'll talk about here in a moment. But Tom, there's something even more impressive about what you just said. During those examples, once again, the market was actually in really bad shape because December was a wrecking ball for a lot of people's portfolios. You guys might remember, we got the Trump win, the election in November. The market ripped up in November and then gave everything back in December. Everyone thought December was going to carry on the momentum. Market was going to have a huge Santa Claus rally, everything else. Instead, it turned around and people got crushed who doubled down after the November win. So to your point earlier, most income methods are still dependent on the overall market not crashing and burning. I'm not afraid to admit I'm in that camp. I'm mostly bullish. Yet during that stretch, these anchor trades would have delivered 6 out of 7 wins, 86% hit rate, and a huge net positive. And that's on those charts that I just showed you with the whole market going backwards and giving up everything. So if I'm understanding you correctly, folks could have completely ignored all that chaos, not even tried to predict the broad market or pay attention to any headlines. And if they had access to the private Telegram, they could have followed the exact instructions all month long, which a study would have showed about $3,500 in net income for every 5K, including winners and losers. So how is that even possible?
Well, Nate, that's exactly right. And it's thanks to the discovery we made years ago and have been optimizing ever since. You see, as I keep hinting at, we're not trading the regular market at all. We made this unique discovery inside the $58 trillion U.S. bond market. Now, the bond market itself has a lot of interesting benefits. Some of them we'll get into in a few minutes, but here's the big one most people have no idea about. Actually, before I tell you, let me ask everyone a question. What is the proper price of the S&P 500? What is its true value? Let me know in the chat what you think the answer to that one is.
Yeah, everyone let us know. And then, well, here, I'll answer. So I would say the S&P doesn't have a proper value, doesn't have a calculated value. I'm curious to see what people say in the chat. I would say just like any asset, it's supply and demand. It's worth whatever people decide it's worth on any given day is what the S&P 500 is worth. I mean, we could see the S&P get bad news.
That's probably the most honest answer I've heard in 40 years of trading. It's worth what it is on the day it swaps hands.
Well, and we know that listen, that we could get good news that we think makes the S&P more valuable, and it could go up, or opposite, it could go down. Just like recently, we got good news and the market ripped and sold off 3%. So I would say there's no true or correct or scientific answer for the value of the S&P.
Nate, you're exactly right, except for one thing. You said that that's true for any asset. And while it's correct for just about every asset on the planet, bonds are uniquely different. Most people are confused by bonds. You see, bond prices aren't just what people feel like they should be.
Yeah.
They have an objective pricing formula that can either be right or wrong relative to the price bonds are trading at in real time. Here's the formula. Everybody got that?
Yeah, everyone write that down.
Write that formula down. Now, we don't have to get into the weeds or what all this means right now. Just understand that bonds are unique in this way. That's why one of the deepest research papers ever constructed from the 2014 Journal of Financial Markets makes a stunning conclusion. Empirical evidence strongly suggests that corporate bond market returns are predictable. There is evidence of return predictability for both investment grade and high yield bonds. These results are robust to alternative model specifications, return measures, and exclusion of extreme observations. And by the way, AI agrees. Here comes artificial intelligence.
Yeah, it says
Bond
right there.
prices are more predictable than stocks.
Yeah, interesting.
Now, we have known this fact for years, but we didn't have a real way to capitalize on it until recently. You see, a few months ago, we ran our study on our Genesis bars, and he was looking at which assets were most stable under certain conditions for the purposes of generating income from those assets. That's when the data revealed something that shouldn't have shocked us, but it did. Under identical conditions, looking for stability, the SPY delivered a 51.22% win rate. QQQ delivered a 48.78% win rate. The IWM delivered a 47.37 win rate. Gold delivered a 52.94% win rate. USO oil delivered a 56% win rate. Now TLT delivered an 80.77 win rate. Remember, that was the moment we realized we could skim cash flow with the built-in advantage of this $58 trillion mega asset.
Yeah, well, let me jump in here because those numbers actually are stunning. For anyone, if you guys in here, if you've done a lot of testing like I have, I do testing all the time, you don't just see massive leaps in performance like that from the very same conditions. And what's really interesting about your data is you can tell it's actually not a fluke. For example, you guys can probably follow this. The assets we know are traditionally less stable, like small caps, IWM or the NASDAQ, well, they were also less stable. They were the lower win rates. The S&P was in the middle, kind of middle stability. Gold, more stable, did a little bit better. And then there's TLT at the top of the list, which represents the $58 trillion bond market, just absolutely blowing everything else out of the water by a huge margin up. So you said we shouldn't be shocked, but I have done enough data analyzation to be completely shocked that one asset under the exact same conditions could be that much more profitable.
You nailed it. It's not a fluke at all. In fact, after Jonathan presented those 80% accuracy findings, we had him dive deeper and cover nearly 10x the time span under these same conditions. And the results for TLT barely budged, going from 80.7% to 80.3%, even as the data set completely changed. That proved beyond any doubt there was some real magic in this particular ticker for this trading opportunity. And as you know, Nate, from there we have been automating this brand new opportunity so traders can take full advantage of it.
All right, so we now realize that most people have no clue how unique bonds are compared to the regular assets we trade. Completely lost on people. I will admit, lost on me as well. Never even considered trading bonds differently. And now you've shown us that using bond stability to your advantage creates one of the biggest outsized advantages that I've ever seen. But what is actually happening? So we know, okay, 80% versus 52, it's stable, it's 58 trillion, but what are we actually doing? Are we holding TLT and collecting a 4% dividend at the right times? Like what is actually going on?
No, not at all. You see, well, most of the $58 trillion in the bond market is doing just that, using it as a safe haven to collect 3 or 4% a year. We're not interested in that at all. What we're doing is using that stability to place a special type trade that has the power to pay out nearly 5x the annual amount that TLT pays. That got your attention, didn't it? In one day.
Yeah.
Let me show you what I mean. On November 11th, we got a full go on TLT as it met our stabilization requirement. Said it was bullish, which means it's going up. And then the trade is entered, okay? And you do the trade, and large enough income threshold at 25% to validate the trade. When these factors align, it means we have an official anchor trade which triggered at 12:30 p.m. Now, the automated system fires off the exact trade details in the private Telegram channel with a step-by-step instruction. And from there, we just wait for the TLT to remain relatively stable to collect that juicy income in under 48 hours. As you can see here, this is one pretty stress-free way to take money and grow it, as TMT remained great.
Yeah. So let me jump in one more time here. Probably not one more time, probably a few more times to be honest, but 2.5K on that one. You're making $625 in under 48 hours. Again, you showed us what, like 8 or 9 so far under 48 hours. And once again, didn't seem to care what was going on in the broad market. What didn't matter for that trigger at all. It's just a matter of what happens with that particular asset in those particular conditions.
Yeah, not at all. And it's really the beauty of this brand new opportunity. I'm not trying to predict anything. We're playing the numbers. All I care about is tapping into the specific market when the stable conditions are confirmed and skimming along some income off the top when these trades work out. Remember, there's about $58 trillion in this bond market, and as long as this uniquely massive market doesn't go off the rails during our trade, we should collect a nice payday within a day or two. not a long time hold, within a day or two. And take the September 16th trade where we picked up $476. It stayed in the green area. We'll call it the green room. I like that. Anchor income achieved right there for everybody to see, $476. This already got your attention. As long as it doesn't go off the rails, we expect to claim our income. You see how wide that is? It gives you a wide range for you to end up profitable. And all we're doing here is using a special type trade that this asset supercharges. You see, when most people think of options, they instantly think direction, usually buying a call or put, the way I think about it. But in an income trade, it doesn't work that way. Instead of buying a call and needing the price to go up a certain amount to make money, an income style trade uses a simple spread to create a profit zone. And as long as the option expires above that level, the trade pays out a profit. And if the price finishes below that level, it turns into a losing trade. So you probably can already see why a stable asset is ideal for this style trade, right? If it's stable, it's going to stay in the green room, the less likely it is to torpedo below the profit zone. Thus, the more wins you're likely going to have. And Nate, that was the massive breakthrough on TLT. We ran the numbers using our proprietary trigger. TLT was dramatically more stable.
Well, Tom, it does make perfect sense. I mean, just look at that September 16 trade you showed us. Your TLT position barely budged. You guys see how much room there is and how little those candles moved relative to that range. It never even got close, about as stress-free as it gets. But here's the crazy part. If you took that same position on September 16th, but on the SPY, it looked quite a bit different. Here's the SPY, okay, same day that trade triggered for you on TLT. You could set up the same kind of income trade, right? You got a nice big fat zone on there on the SPY, plenty of room to stay in the green room. I'll use your terms, plenty of room to stay in the green room there. But while TLT remained totally stable and delivered an easy win over the next 48 hours, SPY didn't look so good. Not so stable on SPY over the same 48 hours. So we're talking about the same type of trade in the same conditions at the same time, but one is a massive loser and the other is a stress-free winner that never even got close. And that's a huge difference.
That's the beautiful thing about it.
Yeah, well, it's a huge difference. I mean, especially if you go over the data, over the long term, like your win rates were showing.
Right.
But the stability is really only half the trick based on the notes we have from you and Jonathan. Is that right?
That's correct. Exactly right. Part of the reason TLT is so effective is a kind of a silly advantage I'd never even considered before. Believe it or not, the underlying price of TLT being so low relative to massive size plays a key role in why this trade is so effective. Let me explain. Remember, the bond market itself is about $58 trillion. The TLT reflects the bond market's 20-year pricing, like how gold reflects gold's price. GLD reflects that. But TLT is priced under $100 per share, which means if the bond market loses $250 billion in value, has a real bad day, it's equivalent to TLT dropping only 36 pennies. Follow that math. And this helps our income trades because it makes TLT even more stable in practice. For example, just recently on Monday, November 10th, the market had a major rally with news that the government shutdown should be ending. Y'all remember that, right? The chart below with the SPX showing the reversal and huge jump in the S&P 500 on the news. If we zoom in, we can see how the S&P actually worked out. It closed at 67.28 on that Friday. And it closed at 68.32 on Monday, which means it moved $104 in just one trading day. Now, before we dive a little bit deeper into why that's so important, let's compare it to TLT on the same day. TLT closed at 89.57 on Friday, 89.55 on Monday. The 2-cent movement on TLT compared to the $104 movement on SPX is a lot more like a Cadillac trade than it is a race car trade. Now, of course, that's a pretty extreme example, but it's meant to show how different the TLT can operate compared to the rest of the market.
All right, so let me jump in because this is the math stuff I love. This is where I got convinced when we actually went through the math on this. And it goes right back to your explanation of that income style trade that we just talked about. So you're not saying the bond market doesn't move. In fact, we've seen it trend nicely over the last year. We're not saying it doesn't move. What you are saying is that the bonds have a distinct and unique advantage because of this TLT trifecta. Number one, it is massive and hard to move. So it might move 36 pennies when the SPX moves $100. It's one asset class that's much bigger than the entirety of the stock market. So it takes a lot to move $58 trillion and kind of push it off the rails during your trade. That's why even in an apples to apples comparison, TLT moves about 40% less than the S&P 500 on a day-to-day basis. So even if you shrink it down and go by percentages, it still moves a lot less. Number two, its underlying price increases the advantage. Not only does TLT move less on relative terms, like as a percentage, but it moves way, way less in real dollars because of what you just said. The price is really low. So it moves very, very little. And then number three, it's more predictable and stable. Top level research shows the bond market is more mechanically predictable. And then your own research shows it's way more stable under the exact same conditions as these other assets. So those are the three I think we have. Is that all right?
Yep, that's right, Nate. Let me walk you through why that trifecta is so incredibly powerful. Remember, income trade uses a simple spread to create a profit zone on the chart. And that's that green room I'm talking about. Anything above that zone equals profit. Everybody understand that, right? In the green zone, you've got profit. In the red zone, you got loss. But we're not just taking a coin flip trade looking for it to make a move to our side of that profit zone. We only take a position when our proprietary signal fires on TLT, which means the price is already well into the profit zone. So we need the TLT to make a move in our favor to win the trade. We don't need that. It's already in the winning position with time going by, plenty of room to spare. We simply need the $58 trillion market not to go off the rails in order to collect our premium. And as long as the price stays anchored to its expected value within reason, we're looking good, which is our data shows happen about 80% of the time when the signal fires.
Yeah, I think it makes so much sense. When the asset is already in position to profit, that trifecta means, hey, it's really stable. It's very unlikely that it's going to break you when it's already in that position. You're not talking about giving it weeks or months to make a move. You're talking about less than 48 hours. So again, you're just kind of stacking up all these advantages. It's stable. You're already in position. It's already there. Your trigger hits, and you're not giving it a lot of time to move away. So you're not kidding when you say it has to go off the rails in no time flat to create a losing scenario. And so I got to admit, as an income guy in my own right, I really love what you've done here. I think this is one of the coolest trades that we found because it is so different and unique from other income techniques.
Well, Nate, we've been hard at work trying to find these unique opportunities. When this one came on the scene, that people can execute within a ton of confidence for all the reasons we're talking about. Confidence is important in trading, but I'm glad you brought up what it takes to cause a loss, because that is where things get even better on anchor trades. You see, most trading strategies or income methods I know of have one really major flaw. They do a great job picking up winners with a high hit rate, but when they do eventually take a loser, right, the losses can wipe out all your gains. That's happened to me many times. There's nothing more frustrating than that. I am sure all of you have been there and you know exactly what I'm talking about. But part of the secret sauce of the anchor trade is the following. We should never take a 100% loser.
Yeah.
As a matter of fact, this is the biggest advantage of the underlying price of TLT. And most people have never been trained on this. Let's go back to our chart one more time. I want you to see this picture. That yellow line represents the point which a trade flips from being a winner to a loser. Everybody see that? Give me a yes. Everybody see that? Where it goes from green to red. In reality, that's not quite true, but that line is actually a range of two options we're trading. It could be 50 cents wide or $1 wide or even $5 wide. Now, most people don't really care about the range because it's very narrow relative to price, meaning that the price can easily cross from one side of the line to the other side, like you see here. For example, the SPX is priced around $6,800 and uses $5 wide spread. So the range is about 0.07% wide. That means a typical 1 minute candle will cross back and forth through the entire range with no problem. Winner, loser. Wears you out, doesn't it? So on the SPX, it acts like a clean line. But TLT is different. Our trades are $1 wide, which is a move of over 1%, a massive move for TLT. And that's absolutely critical. because it means that our trades don't go from the profit zone here to out of the profit zone here. That's how most income strategies work. On one side of the line, you win, the other side, you lose every penny. But our trade takes advantage of the range by giving a trade a lot more room where it can roam. It still has value. And this is part of the secret sauce that makes this whole system so much more profitable. Because it means on the rare occasions when it doesn't work out, which does happen, we're not wiping out the entire account. Instead, that's a manageable setback. Look at this. Look at this. It's unbelievable when you just sit back and look at the difference of keeping the risk. I always tell people to worry about the risk. The wins add up a lot faster.
Yep.
And to make it easy where you don't have to manage that range I just described, I'll give you a clear stop loss rule on every trade right from the beginning, before you even make the trade. As I've showed you, the entire bond market has to make a pretty huge move to put us in the danger of hitting our stop loss.
Yeah, so I absolutely love this. Me and Kane were talking about it too last week, and I definitely agree. Most people will never learn about how that range works. I've listened to 100 presentations. No one has ever explained how to use the actual range. And you guys can let us know in the chat if you agree. I've never heard someone say, well, then we have this middle zone that can also be used to our advantage. Now, of course, there's a good reason for that. For most strategies, it doesn't even tend to matter a whole lot. But the way TLT is priced, wow, I mean, you can literally see that completely changes the game. You have an entire 1% extra cushion there where the trade has still value baked in. So I'm sure a lot of folks in this room are newer to options. They're not even sure why that matters so much. This might be pretty new to them. They may not even understand what we mean when we talk about a 50-cent wide or a dollar wide. That might be new. But the beauty of Ton's system is that you don't have to understand all the nuance of how the options work. It spits out these dynamic trades in real time with the exact instructions to follow, so you don't have to figure out what range or anything else. All you really need to know is this pricing loophole can help not just keep the win rate high, about 80%, but also keep the losses small. Guys, if you can keep the win rate high and the losses small, you're going to be onto something, which is probably even more critical over time than the win rate. So, Tom, now that we've seen the power of anchor trades, let's get down to brass tacks. How do we get our hands on the very next opportunity?
Well, the only place to get the real-time income alerts is through the private Anchor Trades Telegram channel. Until now, the only members in that channel are my medallion traders who are paid north of $25,000 to be medallion to access all of my behind-the-scenes type work, and I've considered keeping Anchor Trades available only to my most exclusive members. But after analyzing all the data and completing all the research, our team concluded this is a trade that everyone here tonight should have access to. Even if you got buried losses from years ago, you ought to be thinking, I finally see a trade that I can do and not blow my account up. Let me tell you why. Anchor trades are designed to work in all different type of market conditions. We have those. Anchor trades have been incredibly consistent with a historic accuracy rate of nearly 80%. Anchor trades keep losses mitigated so you don't wipe out all your gains with one trade that doesn't go your way. Anchor trades are extremely easy to follow, even if you're new to options, even for beginners. Anchor trades are small account friendly with the average trade cost around $82 per trade. That's why today you can become a member of the founding family. I'm going to call it founding family of Anchor Trades Income Alerts. This is the only service I know that's completely dedicated to take advantage of this unique income opportunity in the bond market. And after going through nearly 5 years of data, which takes into account the bull markets, the bear markets, up and downs, high inflation, low inflation, and every political change you can imagine, the final study shows small account friendly, 82 per80 position size, $458 average one-day income based on a $2,500 investment, and 80.3% success rate with built-in risk mitigation. And the best part is we made all the alerts incredibly easy to follow. Nothing hard about this. If you can read a basic sentence, you can do this trade. We made the alerts incredibly simple to read, automated it, Anchor Trade private Telegram channel. Our custom algorithm scans TLT 24/7 looking for anchor trades. It's pulling in a whole lot of data, including defining the proper net asset value, along with our proprietary reference levels. Every day at 12:05 Eastern Time, the algorithm pushes an update into the Anchor Trade channel. We call this a heads up because it lets you know where we stand if the trade is imminent. You can see some of the data we're scanning here, like the low threshold. That's the price that TLT would have to break below for a bearish anchor trade to trigger, and the high threshold. Look at the difference, very small difference on that, less than $1. And that's the price TLT would have to move. And it shows you what the current bias is and even the expected options trade will take if it's triggered. And my favorite here, it tells you exactly how the trade is to trigger in the next hour or so you can prepare. You're not sitting there staring at a screen. And when you get a trade, it's even simpler. The algorithm automatically posts into the Telegram in real time with exact trade details. It includes the option strikes, the expiration, the current price, your ROI potential, etc., everything you need about a trade automatically. You can follow this step-by-step trade instruction and set up your own anchor income strategy. And remember, every time one of these alerts fire, it's the same criteria. Our study shows would have hit with an incredible 80% accuracy.
Yeah, so the Telegram makes it really easy to follow. That's what I've followed the last couple of days, and that heads up where you kind of know what to expect. Hey, here's what we're looking at. It's likely or it's unlikely. And then you mentioned you expect this to be the highest performing income trade in your arsenal. I mean, that 80% win rate. So until now,
you said, Nate, let me just interrupt you. What you said, and the difference this trade is the risk side of the equation.
Yeah.
The risk side is so small relative to other income trades.
Yeah. Well, like you said, until now, only the medallion members have been allowed in that Telegram channel. So I think we're braced for impact, as they say, on what the cost for Anchor Trades Alert is going to be.
No bracing required. I'm sure I can make Anchor Trades a full premium service that costs approximately $3,000 a year to be included. It's worth it, especially when we account for the tens of thousands of dollars we spend on data to power the automation. The $57.98 is the monthly bill for just one of our data feeds, right there. All the computer such there, or a total of $70,000 per year. But don't worry, we're not going to pass that $69,576 annual bill to you. Today, we've shown you over and again how these anchor trades have shown the power to pay $460 in less than 48 hours. Obviously, I can't predict the future, and I can't guarantee our next opportunity will be a winner, as we've said in a dozen times. This is the long run play. Our historic study shows that as long as the $58 trillion bond market doesn't go off the rails, we should expect that $460 to hit our account within 48 hours. So I'm going to open up Anchor Trades founding memberships right now. Get ready, folks, for just $460 per year. That can't be right. $460 per year. And my hope is our first alert gives you the chance to pay off the whole year, put you in scholarship form for the next 100 trades you do. Now, let me be clear. I don't know how long that price will last. I'm not guaranteeing a certain amount of spots. It's first come, first serve that wants it. So if you want to make sure you don't miss your chance to get in one of those family spots, do it tonight. Grab this ridiculously low founding membership, and we'll open up access. I have one special bonus you should know about. Inside the members area, in a report simply titled the 30X TLT trade. Now, 30X means what? It means 30 times your risk. It's a longer-term trade on TLT that costs about $15 per contract and pays over 30X reward. Now, of course, it's a low probability moonshot trade, but I think the conditions exist that make it achievable. And here's the deal. Just one tiny contract at a cost of $15 would pay for your entire membership if it hit. It would turn about $485 in profit on the moonshot trade. And that's what I'm hoping for with this outsized trade opportunity. And just to make sure you have the spare cash to make that bonus trade if you want to, I'll give you an instant $15 rebate off the Anchor Trade Alerts membership. So you can join tonight, $445 for the entire week. Not kidding, for the entire year.
For the entire week. I love it.
Claim the founding membership right now, dtitrader.com/anchor, or you can call our team at 904-706-3532 if you have further questions. And as soon as you lock in your membership, you can log into our one-click trading portal, and you will see how to join the Anchor Trades Telegram in just a few clicks. Very simple, not hard to do. I can follow it. And from there, you get every alert in real time right to your phone or computer. Now, don't worry if you've not used Telegram before. It's very easy to use. We even have a short guide in the members area to walk you through step by step how to get on Telegram if you don't already have it on your phone or computer already. Now, if you paid attention tonight, you know that this isn't just another trade setup. It's a special one. Anchor Trades have shown the power to work so well because of unique advantages built into this strategy. I'm sure we keep those secrets behind closed doors and charge another $9.97 for access to the strategy itself. But of course, founding members will get all the details inside the Anchor Trades Strategy Guide. This is a step-by-step guide that reveals all of our proprietary rules and guidelines. And it's included for free inside your Anchor Trade sign up for founding membership. And if you're new to options, we have you completely covered. Inside your members area, you can find a step-by-step video on how to place these income trades. And if you want to dive a little bit deeper into the bond market so you have an even better understanding how Anchor Trades operate, we're also going to include Jeff's 297 bond class for you at zero cost for members.
Well, Tom, it looks like you have definitely loaded everything up possible. I mean, it does look like a $3,000 membership, as you mentioned, the alerts, the strategy, the training, all the stuff in there for $445. We should have done the monthly deal. That's what we should have said. Do it for 30 days, see if we hit a few winners, and then have everyone upgrade. But I guess we'll do it for a year, and then
tonight we'll do it for a year. We're going to talk about that, Nate, because this is so valuable. We'll do it tonight for that price. That's what we said.
Yeah. Well, there you go. Well, I can't wait for the next one. I'm 3 for 3, by the way, Tom, on these from firing in the Telegram. So yeah, I'm ready for the next one.
I did 2 for 2. And I said to myself, and I started looking for it, I looked at my watch, I said, I got to go check that trade out. And I did, and there it was. I did it again. And I couldn't believe the price. I actually got in on the last one at 61 cents.
Yeah. Well, remember, you guys don't have to be a 25K Medallion member anymore to get access. Founding membership is insane discount, $445. That price is correct, with the goal that the very next signal hopefully pays off your entire year. And it'd be pretty nice to have the whole year paid off in 48 hours. Like the research showed happened on September 3rd or July 11th, or this one on June. I mean, look how safe most of these trades are. It doesn't mean that all are going to be like this, but look at May 7th. It never even got close to that. I mean, here's February 5th. You got a little bit of lower movement. Look how easily that one fished. I mean, over and over and over again, these trades are so solid. Plus, Tom's giving you the 30X TLT trade report. By the way, I'm in this trade as well. I've got a whole bunch of contracts of this 30X trade. So, Tom, fingers crossed we get that.
Absolutely.
I think 2026 could be a heck of a year for
I do too.
For TLT. So I think this trade could really cook as a bonus. $15 if we hit it. Hey, that'll pay for the membership. So hopefully you pay for the membership on Monday or Tuesday if we get a trade. But hopefully you also pay for it with the $15 trade on the 30X. Plus you get the strategy report, you get the other bonuses, you get the Jeff bond class. So, I mean, hey, we waited until November, but we really got the no-brainer of 2025 done for you guys here at just $445. So if you haven't grabbed your spot yet, do it now. It's ridiculous. It's the most obvious no-brainer we've probably ever done. This, by the way, Tom mentioned that data feed that powers the algorithm. That's just one of the data feeds. That 69 grand is just one of the data feeds that we have hooked into here. The overall cost, I mean, me and Graham have run through them before. There's several $100,000 of data just to do the testing and then the real-time commercial data feeds to put these out. So you're getting access to something that has 6 figures worth of development back end into for $445. It's a pretty good deal. So take advantage of that. One of the big questions we got is how often will it trigger? Tom, I know you're going to teach them how to get some bonus trades out of that. I don't want to spoil that for them, but I noticed on the test, it was about 5 times a month was the average. So 1 a week or so, typically you could take some bonus once you learn a little bit more. And Tom, I know you kind of twisted around with some of those bonus trades over the last week. So I'm not sure if you're planning on teaching people that or if that's just for you, but they could get some bonus trades.
Yeah, absolutely. Everybody knows that we're going to make sure we work at it together, but I'm really excited about this, folks. And I think that the numbers speak for themselves If you're here to learn, you're here to have something in your account that diversifies the standard up and down of the S&P. This is your trade, because what it's going to do, people always ask me all the time, Tom, I'm worried about the market. Here's something that you can do to diversify your account and have it working for you when it fires. It's easy to read. That's what I like about it. It's so clear. It's simple. It tells you, here's the option you're going to buy, the time you're going to buy it. You got all day to buy it. You don't have to buy it once it figures. You just get in at the price and you put it on the day of when it triggers. You got all day. So it's not like you got to call an ambulance to get you to your broker. You know, it's right there for you. Okay.
Yeah.
And
well, that's one of the benefits of how slow it moves, actually, because it is a slow mover. So I got in a couple late. Actually, one of them I got in the next morning that I missed. It was about a penny different. I got in the next morning, and it was still. These examples are all based on $2,500, Lisa. So average trade is going to be in that 18 to 19% ROI, which keep in mind, I think people should understand this.
Another thing that was amazing to me, it's sort of like if you look at the trade when it sets up, you're buying it at such a discount to the real value of it. And so the only thing that you need is to stay in the green room and the time to click off. And one thing we know about time, right, folks? It keeps moving. So that time is working for you now instead of against you with options. You got to love that part.
Well, I think the 18% average win is really juicy. We're talking about an asset that's very boring, to be honest. It doesn't move a whole lot. And we're talking about one-day trades. So a lot of people think, 18%, that's pretty good. And they're thinking like a 2-week, like an income machine try, like I would do. We're talking guys like one day, flipping around and making 18% in one day on that asset. I think that's really, really attractive, especially then if you factor in the part that you're not taking a full loss when you're wrong. And so like this, if I have to pick my favorite thing in the whole presentation, Tom, it's got to be this, right? I mean, you looking at this and how those wins can stack up when you have mitigated losses makes all the difference in the world to a real trader. And I'm sure you guys have experienced exactly what I'm talking about, because I trade a lot of income, and a lot of times when I lose a full 100%, right? I risk $1,000, I make 200. I risk 1,000, I make 250. I risk 1,000, I make 210. But then I risk 1,000, I lose 1,000. So that difference in what you're losing really makes a big difference. So I think that part.
I love the risk mitigation. In fact, because of the risk mitigation, it allows you to trade, based on a level number. After you get confident with it, you can take that up. And, once you get, go through about 10 of these trades, say, hey, maybe I want to increase that allocation because this does work the way it was said it worked over enough trades. The numbers work for you, make them work for you. I just want everybody here that, that goes through the heartburn like we had last week, to have, be able to sit there. If it happens again with that heartburn, you look over your anchor trade and it hadn't moved, you go, boy, that's a good trade. That's what you're going to say. I guarantee that's what you're going to say as a trader. Oh, that's a good one. Okay.
Tom, this is awesome. I had some, some kind of little previews of what this was going to be tonight, but this is even better than what I knew about, what I thought was coming down the pipeline here. So congratulations on this. This is so cool. And the fact that it's just fully automated and everything. Also, with everything I know that was put into developing this, I don't know how you convinced Nathan to put the price so low, but folks, if you're at all interested in this program, I would grab it at this price, 1,000%. And somebody asked what about VIP lifetime? So on the second page, folks, if you take the $445 offer online, on the second page, you can upgrade to the VIP for another $445. So for under $1,000, actually under $900, you're getting lifetime access to these daily alerts. So that's just an incredible deal. A couple of questions, if I can throw at you, Tom, that were popular in the chat.
Sure.
These are daily trades. How often is the criteria met that there's actually a trade?
Usually it's about, like Nate said, about 5 trades a month, which doesn't sound like a lot of trading, but that's okay if your account's growing with the 5 trades. And that's what I'm talking about. You start out maybe small, and you say, well, look, if I'm going to do 5 trades, you get confidence on it, you can increase your exposure as you get the confidence grows and you see how it works. It's not a complicated strategy, folks. You buy it at a discount, and you cash out at retail. That's the beautiful thing about this. And all you got to do is stay in the green room. You're going to make money. And what's so beautiful about what Nate put together and Jonathan put together is it's so simple to read. I didn't call Nate and said, how do I read this? I didn't call Jonathan, hey, what is this telling me? Hey, buy this option, be bullish. That told me it was need to be, it's going up, and this is the target I'm entering, or this is where I'm entering, and this is where I'm exiting, the time I'm exiting. Love it.
Awesome. Couple other questions. So do they, if I remember correctly, they have a choice kind of how they play this. They can set a target, or they can just let it ride till expiration, right? You're going to teach them both methods?
I'm going to spend a master class and show you the benefits of doing either way. It's always the player's choice, the way we do it, and so it'd be up to you. You'll have both. Why you want to do it one way versus another? Personally, let me just tell you this: if I pay 80 cents for something and I can sell it at 97%, I'm not going to stay for the last 3 cents. Okay?
Yeah.
I'm not going to do it. I'll take that 80 cents and wait for another anchor to come along.
Now, for the people who asked about the day trading rule and stuff like that, if they're worried about that, first of all, you aren't doing it that often that if this is the only one you're worried about, they don't even have to worry about it.
This is not a day trade strategy. This is I would call this as a time strategy. It's a time for anybody out there that's lost money to have a diversified way to make money when maybe they're losing money with their main strategy or whatever. This is a diversified way. It's not a day trade. It's playing in the bond market. And the thing I like about the TLT, it's a lot easier to understand the TLT from 80 to 81 than it is the bond market, 30 seconds and, the 64ths and all the stuff you got to learn on the future side of the bond market. This is simple, like a stock, okay?
This is a stock trader's way to trade bonds, right?
It really is. That's a good way to say it. It's a stock trader's way to trade something that I trade a lot of, which is bonds. In fact, my mind was thinking, and I'll tell Nate this, people know I teach futures, but my mind was thinking, I think I'm going to do this trade on the futures also to have a little bit more, race car type approach because this is a heck of a trade with the TLT. Heck of a trade.
Now, do they have to worry about assignment with TLT?
It depends, and I'll explain that in the master class, okay? Because the master class will give everybody benefits or ever how you want to handle it.
Gotcha.
And I would say if you guys are worried about the assignment, which of course, if you're trading any kind of income thing, you got to think about it. I would recommend doing the debit spread, which is kind of the default version. Tom will teach you every which way to do it. But if you're worried about it, do the debit spread version because then if you get assigned early, you just get an even bigger profit than you were planning on. Go through one master class with Tom, you'll be all set. You won't have any concerns about.
I promise you, if you're a new trader, if you're a experienced trader, you got any questions at all, take a run with me here because people will tell you in an hour's time, I will give you, and Jonathan will help me do this. We will put together all those questions, all those answers where you'll have that moved away from your mind, okay? Because this is a simple get in here and out there the next day.
And let me just tell people, because I snuck a peek into the members area. If you're worried about, are you going to be able to learn this? There's all kinds of training in there. There's a strategy guide related to anchor trades. There's a separate video for the debit spreads when we're bullish. There's a separate video for the debit spreads when we're bearish. There's an introduction to bonds. There's a 30x TLT trade that we're not even going to even tell you what's in there. It's a surprise. And then if you're brand new to options, there's Options Made Simple, which is basically a beginner guide to options where you can start from the bottom. You can start with that and then take the strategy training on top of that if you're new to options. So, and then of course you have access to Tom's Telegram, his regular Telegram, plus the dedicated Telegram for this program. So there's a lot in there. And then of course you have our incredible support team, email support, phone support, our customer service live, doing live Zooms 3 hours a day, 5 days a week, all kinds of stuff available to you in the way of support. So this is just really, really cool. There was one question about how time sensitive the trade is getting into it. If they're not available between 12 and 1, how much time do they have to get into the trade?
By the end of the day at the price, Nate already gave it where he missed a trade on the time it was entered and made it the next morning. It was off 1 penny.
Yeah, 1 penny difference is what I paid.
This is sort of like, let me describe the bond market this way. The bond market is your money fund that you have at the bank, okay? It's stable, right? It's at $1. The only difference here is it will move a little bit, okay, from that level. And a little bit means less than $1. Okay, on most days, unless it goes off the rails, you have one of those crazy days. And you can always have that. But the point is the TLT might be, until I come up with this strategy, the TLT might be the most boring ticker in the world to trade short term. Welcome to boredom. Money comes in your pocket. Who cares about being bored when you're making money, right? That's what I'm thinking to myself. I need to be more bored like this. You know what I'm saying? This is not a show out trade. This is a grind of when it happens, you're able to follow the simple instructions. It's automatically done for you, so you don't have to wait for me to tell Jonathan, send out the trade. It's right there in that Telegram channel as it posts and tells you the details of it. Own it, okay?
I'm going to give you my stupid analogy. What you've done, or metaphor, I guess, what you've done is you've put a shiny gloss on beige.
Yeah.
Well, you've taken beige and you've made it shiny. You've made it exciting.
Well, for income trading, I mean, for people, you can let me know in the chat, how many of you guys in here kind of consider yourself income traders? You like the income style, you like the higher probability versus directional? Because for most income traders, you like boring. You like the things that you feel like you get into and there's, you're not panicking all week long, hoping that it stays above that line in the sand. And so for TLT, it obviously plays into that. And I really think the heads up thing is really nice as I've been following it now that I have access to the Telegram. A lot of strategies, you're kind of wondering, are we going to get in? Why didn't it trigger today? Why did I get an alert today? Well, now you know exactly why. Every day you know exactly what happened. Here's where it's at. Here's the level it needs to fire. It actually gives you the options right there. Like ahead of time, it says, here are the options that we should be using. So you can set them up on your brokerage, kind of save them if you want. It's really easy. I mean, simple, boring, easy, all those good words that we like to use about income. I think it checks most of those boxes. And I think the best thing is, Tom, of all, is that Penn State is winning 17-3. So we've got
there you go, Nate. Everything's going our way.
Everything's going our way.
For a better sign for the night to join.
Bonus.
Make it happen.
Look at that. I'm going to steal the screen from you for a second, Nate, because I want to show people how easy it is, because we have a few people that seem to be worried about the whole Telegram aspect. Telegram is super, super easy. When you get in the members area here, this is what it's going to look like. And the very first thing on here is Telegram access. And there's a guide in there that there are two things in there. There's a link to the Anchor Trades Telegram channel, but there's also a link to a guide that shows you exactly how to sign up for Telegram if you want. And it's a free program. You can put it on your computer, on your tablet, or on your phone, whether you have an iPhone or you have an Android. As long as you don't have, a 1982 flip phone, you can put it on your phone as well. And it's just a messaging program. It's just a messaging program, but it allows Tom and the system, the automated system, to send these alerts out to you with no delay whatsoever, and with all the information in there. It doesn't chop it up into 200 characters per message or any of that garbage. So that's why we use Telegram. It's reliable, it's fast, and it lets us put all the information in one message. Here's the other stuff while I'm here that you get in the members area. Let me zoom out a little bit here. So you get, again, the strategy guide. You get the setup on the bullish debit spreads. There's also a third one in here for the bearish debit spreads. And then you get the introduction to bonds, you get the 30x TLT trades, you get the option made simple course, and Tom's other general Telegram channel. So you get all of that stuff with even if you just join for the 1 year, you're going to get all that stuff. But if you want access to it forever, you want to take the lifetime for sure. So that's my recommendation with the deal that you have today, to go for that price on the VIP and not have to, because if you join for a year at 445, that's a fantastic deal. But a year from now, if you want to keep doing this, if you're planning to trade for more than a year from now, you're going to have to renew at whatever the price is then. And I'm guessing it's going to be $29.97. So
I would tell you after we put a month with all these people that are joining, that price is ridiculously low. 445 for this. This is so valuable. I mean, think about this. Think about this. Maybe you think the market's going up, which I do. I think it's going to go higher, right? And there haven't been two down weeks in a row since April, right? People that work with me know that, right? So next week should be a good week. But think if it's not up. Anchor is a diversification against that normal trend and seasonality next week. So you got this in your pocket, and then you can build it as you grow your account. You know, you could be in such a situation by allocation, money allocation. It doesn't need to trade 100 times. 5 trades a month on something that you got confidence in, something that you know and seen work, you know, after 20 or 30 of these, then you can step it up and you say, okay, maybe I'm going to allocate a little bit more money into Anchor. Okay. I can see this being a very stable part. If you like dividends, I know a lot of people like dividend stocks, right? This thing is so good that you don't have to worry about the depreciation of the asset that's paying the dividends. It's a grind. It's just grinding. And here's the other thought process. The 15X trade that he's talking about, it doesn't just have to be bought this week. You can keep adding to that position with some portion of what you're grinding out with the Anchor. You see how I would do it? Maybe you start out putting $100 in. Week later, 2 weeks later, you made a couple thousand. Maybe you put $200 in. You see how that works? That's called pyramiding your profits. I'll give you that in the master class when we get there.
Yeah, it's a way to more rapidly grow your account, and there's all kinds of tricks of the trade that Tom can teach you because he's been doing this for a couple of minutes. Would you say, Tom, you've been doing this for a couple of minutes?
This trade here?
No, trading. You've been trading for a few minutes in life, right?
Actually, my hair used to be black, and it's turned sort of a blondish color now, blondish gray. It's turning back. It's turning back black. I'm going back in time. We heard Saturday Night Live tonight for the first time in all those years, right?
Nice. A little disco music to put some color in your hair.
Right.
I wish that would work for me, Tom.
Yeah, the beautiful thing about it too, somebody asked this question and I'll answer it. The spread on the bid and ask on the will handle volume. So that's not an issue with this particular ticker, which is beautiful for people that like to leverage up a little bit.
Somebody earlier, actually at the very beginning of the webinar, said you had great hair, and I didn't want to start a conversation about that because I didn't want Nathan to feel bad. He usually gets the compliments on his hair. Somehow it's never me.
He's got a do, doesn't he?
Somehow it's never me. I'm not sure why.
They're not talking about your hair, are they?
What was that compliment I got on Friday, Dave? I got some back
for your hair or the other one.
No, it was something like I'm smart even.
It was that Nate's pretty smart for somebody who went to Penn State.
Oh, is that what it was?
Yeah, that's what it was.
I thought I was pretty smart for something related to Kane. But I couldn't remember exactly. Or maybe it was just Kane is smart, but I'm smart.
Kane is smart with no parameters.
No parameters. Got it.
Yeah,
okay.
no parameters. You're smart for somebody who went to Penn State, and I'm smart for somebody who's lost most of their mind. But nobody mentioned that. All right, thanks, iPad. Nice beard, Dave. I got something. I got a hair-related compliment. It's my year. Okay. Well, getting back to the program, I've got the screen share. If you guys need to jump, I can stick around and just kind of recap. I think we got most of the non-Penn State related questions answered. You got any closing remarks there, Tom?
Yeah, I do. Somebody said, hey, do we have a 14-day trial with this? If they buy it tonight, do they get 14? Yeah, absolutely. But you got to pay me half the money you made during the 4 if you just don't like making money, okay? That's a caveat. Anyway, just kidding, of course. But anyway, thank you so much, Nate. For my first webinar as a rookie, I sort of enjoyed this on Saturday night, and always being around you and Dave, and y'all did a lot of work putting this together for everybody to have. Take advantage of it. Take advantage of it. Take advantage of it.
Perfect. Well,
Don't be
thanks
left
again,
there on
Tom.
the sidelines.
Thanks for doing it at such a crazy price. So kind of puts it in context for anyone. I mean, I think that's one of the beauties of it, right? It's $80 a contract, so pretty much anyone can trade it. But then you got to make it cheap enough to get in, so anyone can trade it. Well, $445. I think you did that. So thanks for doing it and making it accessible. Hope everyone takes advantage. And I'll be trading these next week with you guys. So hopefully get some good triggers, and I'm looking forward to the opportunities.
Awesome.
Sound like a plan.
Thanks,
have
guys.
A great night, folks. See everybody tomorrow night at Sunday night.
All right. Well, folks, if you still have questions, stick around because I'll be here for a few more minutes to answer them. If you have a question that didn't get answered, please drop it in the chat again. It means it kind of scrolled by and we missed it. Frank, there's no trial like per se where you can start using this right away without a purchase. There is a 14-day money back guarantee. If for any reason you don't like it, even if you've made money with it for the last 13, 14 days, you can still get your money back. So at $445, the risk is about as low as we can possibly make it. I never see any of your programs that are this involved in putting money into them and developing them go for $445. So at that price, there's no free trial. There is the money back guarantee if that's what you want to do. Let's see what else. Thank you, Melinda. Yeah, so if anybody missed the presentation or they want to see it again, you can drop your name and email address in the chat. I'm the only one who'll see it. We'll give it to our team to get a message out to you with a replay link as soon as it's available, which should be in a few hours. If you already did that, I have a few people's email addresses already. Melinda, Wendy, Jason, you don't need to do it again. Anybody else, if you want to replay, go ahead and drop it in now, name and email, and we'll get that out to you. Hopefully tonight. If not, we'll do it tomorrow morning. Let's see. Does TLT move too little to trade most days? Well, we kind of have designed the trade based on the fact that it doesn't move very much. So granted, we don't have a qualifying trade every day, but we know like the whole idea of this is that this is kind of a boring stock, and Tom found a way to take advantage of the stability of it rather than what we normally look for in stuff is the volatility of things. Here we're looking for the stability of it, and so that actually works in our favor with the way he's designed this trade. And then Nathan was able to help him automate this so we can get these trades out to you as soon as the criteria is met in the middle of the day. Let's see what else we got here. The basis for the trade is it's a little complicated to re-explain the whole presentation per se, but we have this very stable stock that's based on the bond market, which is usually very complex to trade. And here we have a way to trade it not just once a year, but like on a regular basis, a little more than weekly with options on. So just to give you a little more detail, it doesn't matter if you don't really understand it, folks, but we have the bond market. Then we have what are called ETFs. These are exchange traded funds that trade on the stock market. And now we're taking options on those exchange traded funds to take advantage of this strategy that Tom has put together. So it's kind of multi-layered, but you really only have to worry about the one thing. He gives you that trade alert. We're buying this and selling that, and that's all you have to worry about, those two pieces. Once you get used to it, once you know how to do it, it takes maybe 60 seconds to place the trade every day. And then only in a rare circumstance do you have to worry about when it's going to close or anything like that. Tom's going to give you two different strategies on how to do the exits. You can literally do nothing after getting in them, or you can immediately set an exit order if you want to try and get out early with a partial profit. And he's going to go over the pros and cons of each of those methodologies with you in the training, in the master class. All right, let's see what else we got. So Sherry, I may have just answered your question, but just in case I didn't, yes, we're trading something that's based on the bond market, but we're trading options that trade on the stock market. So you don't have to worry about whether you have approval for bonds or whether you have a broker that does bonds. We are not directly trading bonds. We're trading what's considered a derivative of bonds or something that trades off of bonds. So they're options that trade on the regular stock market, just like an option on Amazon or Intel or Nvidia. All right, everybody who's sending in their email addresses, I'm not going to have a chance right now while I'm talking to respond to you, but I will get them on. We'll get those emails out to you. Ashay, you said, can I put the link in the chat? The link to join, is that what you're looking for? Because like we've dropped it a few times, but I guess if you just got here, then you may not have it. Let me drop it again. So this is the link to join. Boop. That was me booping. I don't know why. All right. I don't have a date on the master class. Adam, if you're listening and you know the date of the master class, can you Slack me and I'll drop it, or drop it in here yourself? But I don't know if it's been scheduled yet. I think they were waiting to see when we got a bunch of people in here. I wasn't given the date. Yeah. Okay, perfect. So the week after Thanksgiving, first week of December. Perfect. Perfect. Thank you. All right. Susan, no, Nathan's not part of the service. He helped develop it with Tom. Tom came up with the strategy, I believe, and Nathan helped him backtest it and then automate it, I believe was how it went down. But it's Tom's service. It's not something that's going to be Nathan's. Nathan, link to the third Jumpstart course. I'll direct message you in a second. All right. Let me see what else we got. So Susan, no, not so. It's yes, it's 1 to 2 trades per week. You said on average it's 5 a month. So it's basically weekly with an extra trade here or there. I don't want to set your expectations incorrectly. It's basically weekly. It could be any day of the week because he's basically checking this every single trading day, and then it's just about 5 a month that it's been averaging where the market qualifies, where the conditions are met. So it could be 2 or 3 in 1 week, and then you might skip a week or two, but it's on average, it's five per month. Let's see. Lost my place here a little bit, so let me go back. Okay, we got that one.